Hey guys, so today I want to talk about Microsoft stock, and honestly, I just want to share a few reasons why I haven't been investing into this stock as much as other tech stocks in the past. And actually, a couple months ago, around 3 months ago before the coronavirus, I was holding on to some options plays for Microsoft. And as you can see, once they hit their high of around $180, they really didn't go anywhere after that. And after the coronavirus happened, I wasn't holding the plays anymore, and I'm very glad I wasn't. However, you can see that they dropped all the way to $135, which is a substantial portion of their valuation as compared to other companies that were able to hold up their value during these trying times. Now, if you see here, they've already recovered up to their pre-coronavirus price. However, a lot of companies have already even recovered above that price and have continued to push up as the SPY continues to get stronger. Now, today was actually one of the greenest days on the SPY in the last month or so. And as you can see here, they bounced from 179 to 185. So this is only a $5 move for one of the largest cap stocks on the market in total. Now, what does this say about Microsoft stock is that it probably doesn't have a lot more room to grow. Now, as you can see, this $185 price level has been holding for a very long time, and as the market continues to push up, the stock still hasn't been able to break this price level at any moment. And essentially, what I'm trying to say is that although they do have a large portion of the PC consumer market, they haven't been able to break into any other markets or continue expanding the products that they already have. For example, Internet Explorer, which is one of their most well-known creations, has been losing and losing customers for the last few years or so. And other computers, such as the PC and this kind of stuff, have been losing a lot of shares to the Macintosh and Apple computers. So I actually live in Silicon Valley, and when I talk to a lot of people, they tell me that they aren't really interested in buying Microsoft products. Additionally, a lot of their people come through the Xbox, and that's how they have a lot of their Xbox and Microsoft subscriptions. However, in the latest times, I've been noticing more and more people switching over to PlayStation or Switch, Nintendo, depending on what they actually like to play. And a lot of people have known this for a long time, but exclusives haven't been coming to the Xbox in a long time, and this is really hurting their consumer segment for this product. Now, what I would say about Microsoft is they are a huge company, and their CEO, Bill Gates, or who was their CEO, is one of the richest men in the whole entire planet. So they have a lot of money to work with, and they can expand into new products and have new ideas, such as the VR technology they were trying to push out a short while ago. However, a lot of their products probably got sidelined thanks to the coronavirus, as a lot of people aren't trying to invest in tech at the moment, and instead of trying to save their money and see where they can invest it later down the road into property or another industry that might be gaining a lot of value. Because when you buy a computer, essentially it's like a car. The second you buy it, it already loses half of its value because the computer market and because the chip market and these kind of things move so quickly into the future. So yeah, I don't really think Microsoft is the type of stock that can rocket above the $200 price level unless we see them release some kind of incredible new product or incredible new idea that we still haven't seen yet for the Microsoft stock. They have a lot of research and development, and they have a lot of other business segments, like as you can see here, they have cloud and other personal computing. However, as you may know, Amazon dominates the cloud market, and so they aren't really a leader in any of the segments as they were in the past when they were leading on gaming or when they were leading on cloud or when they were even leading on advertising. None of these things have come back for Microsoft. So the only reason I would really invest into Microsoft is because, as you can see here, they have a high dividend yield at around 1%. And I mean, this isn't really a very high dividend yield, but it's substantial enough for people like Warren Buffett to be invested into the company. However, like I said, if you're playing this company for long run growth, I wouldn't do so. I wouldn't recommend it because they just aren't able to produce new products or produce substantially higher incomes. As you can see, their revenue estimate has been almost exactly the same for the last year and a half. And if we look later, even in the chart, like before this, I'm sure that their revenue earnings and estimates were probably around the same amount because of the fact that the stock just hasn't been growing. As you can see, other stocks such as Facebook have already pushed above their pre-coronavirus price. Disney is getting close. Apple has already pushed much above. So yeah, guys, there are better tech companies to invest in as a result. And I would just say don't buy Microsoft if you can avoid it, or unless you're very passionate about the stock, because it doesn't really have a long, high growth rate potential in the long run. So yeah, guys, good luck and keep an eye out.